Well, the unofficial capital of Canada's oil sands industry, Alberta, and northeastern Alberta in particular, is battling wildfires this week, some of which are close to major energy operations of large companies like Suncor Energy, Athabasca Oil, and Pembina. We'll find out how it could affect oil production in Canada and oil prices with our featured guest, Lenka Martinek, and Rory Johnston. Rory Johnston is expert in the world of commodities, also founder of Commodity Context. Rory, thanks a lot for joining us. What is your take, based on the information we know right now, about the effect and potential future effects in the near term of these fires on production in northeastern Alberta?
Yeah, so far what we've seen is the impact hasn't been substantial yet, and we've been lucky that it's been happening at a time when we've also been having other seasonal maintenance on the oil sands. However, obviously, this is right in the danger zone, and we could have a substantial portion of the oil sands production impacted by these fires if the fires drift further north. And obviously, the worst case scenario is what we saw back in 2016, where we had substantial impacts to both Fort McMurray in terms of housing and logistics for a lot of these companies and the workers that work at them. But, and again, the big concern is if these wildfires drift directly north. And that's so far, they're hanging around a little south of the main production areas, but they're right in the area where they could pose a much graver issue. And so far, that's the main one that's out of control at the moment.
Would any impact on oil pricing be fleeting?
I mean, what we saw the last time this became a real issue was we did see an acute hit to oil sands production. It was short-lived. I mean, we're talking probably on the ballpark of a month or so, but a month is still a long time when we're talking about the amount of oil that could come off the market. We're talking about upwards of potentially 2 million barrels a day of production in the region that could be affected. Now, that is a worst-case scenario, but I wouldn't expect that to be prolonged. But, given what we're seeing with the rest of the market right now, yeah, it could absolutely add to further tightness in the market.
Bring us up to date on the Trans Mountain pipeline expansion. How much oil is it shipping? Could it be affected by this situation, this wildfire situation? And how close to maximum capacity is the TMX expansion right now?
It's on its way to building there. I expect that we're going to see that kind of reach full production capacity over the next month or so. At this point, what we're seeing is the pipeline is operational and barrels are flowing to the coast. Now the real work is these marketers and the shippers to figure out how to put those barrels where they're going to go. And now, obviously, some of these barrels are going to end up on the U.S. West Coast. But for a variety of reasons, including the sulfur content of these barrels, you can't get all of them processed in the LA area. So a lot of these are going to have to go overseas. That means China. That means India. That means partners and kind of commercial relationships that a lot of the oil sands producers have never had to deal with before. Obviously, 95+% of Canadian exports have gone to the United States, for decades now. These new relationships in Asia take a little while to get working, trying to find the right prices, trying to find the right customers, trying to find the right blends of crude and refineries to put them in. And that's, I think, the process that's happening right now. So I expect that, for the first month or two, we probably won't have, full operational throughput, but I think we're pretty close, probably 90% plus on the uncommitted portion of the pipeline. And then after that, I think it's going to be a question of, trying to find the best price for those barrels and trying to, tease out any of the initial teaser pricing that these producers and shippers were offering in order to establish those relationships and trying to displace some of the other barrels that they're replacing, things like a Rocky Basra crude and other kind of heavy sours from the Middle East.
The big number that Canadian investors are watching is the differential between West Texas Intermediate crude at Cushing and Western Canadian Select at Hardisty, Alberta. That is about $12.25 right now by my crude math. Do you expect it to narrow in months ahead?
Yeah, so initially we were already expecting that it could feel additional tightening pressure as this pipeline came online just at the same time as oil sands project maintenance. That combination could have starved Hardisty of enough barrels that we could have got the differential back down around to sub 10 or maybe around 9 Now, I don't think that that's a permanent, durable tightness in the differential. I do expect us to be around $12 or $13 on a steady state, and that's a really good price for WCS. The difference here is that, and the main thing that TMX and the addition of new pipeline capacity, period, has had on the industry is that those blowouts that we've seen, seasonally every couple of years, and obviously worst of all in 2018, the probability of those discount blowouts occurring are going to be much less. Now, last year we also did see some pressure opening up because of issues with the global heavy market. We're going to still be exposed to those, unfortunately, because we're producers of heavy sour crude. But going forward, we're not going to have the same issues around pipeline, egress capacity and all these other things. So I do expect that we're probably going to tighten a little bit, probably now helped even further with any of the disruptions we face from the wildfires. And then I think we're probably going to widen back out to roughly around where we are right now, actually.
Okay, let's finish with the OPEC meeting set for June the 1st. What does OPEC and will OPEC and the OPEC Plus nations do? Will they roll over that agreement to constrain supplies?
Yeah, so analysts broadly, that's the expectation. We're talking the lion's share of analysts expect OPEC to roll over the production cuts. That now what we're talking about is primarily this latest round of voluntary, quote, voluntary cuts that a handful of OPEC producers, including Iraq and others, have committed to. And then you're also having the lollipop cut from Saudi Arabia and additional cuts from Russia. Overall, OPEC pegs those at 2.2 million barrels on paper. That's the main cut that we're talking about. Because obviously there are additional cuts. OPEC's withholding a huge amount of crude, the most excluding COVID since any other period since 2008. So we're talking about a huge amount of crude that's off the market. But that rollover that we're going to have at this June meeting, the discussion is the most likely around this 2.2 million barrels. The current consensus is that that's going to happen, particularly given the fact that prices have softened considerably going into this meeting. But there is risk, and last weekend there was a lot of chatter around potentially Iraq saying, we're not going to roll over, we're not going to continue the cuts. So I think, heading into any OPEC meeting, we're going to have a huge amount of chatter and rumor mill going in, and it looks like we're starting early this year. So I think barring any kind of considerable defections or massive moves in the market between now and June 1st, my expectation is that we'll roll over, which should kind of keep the market in a tighter position going forward. Now, if we start to roll that back, partially, I think what we will likely see is the non-Saudi, non-Russian portions of the deal get rolled off. And the benefit there additionally is that the OPEC will then be able to kind of soften out some of the non-compliance and overproduction that particularly Iraq has been engaged in. The easiest way to kind of get them to stop is just to kind of take the cut away. And I think that's the one risk we could see, is that we could see some minor dial changing there in order to keep all parties happy. Okay,
we're out of time, but before we go, what is your call on West Texas Intermediate crude pricing for the end of this year? Where will the price be at the end of this year?
I'm thinking probably, I'm looking at probably high 70s. Again, that's roughly around where we are right now. I think about it more in Brent terms, and I'm thinking low 80s for Brent right now.